Do you think this is a very big problem? Single client risk. Let's look at Oracle. So we have mentioned about this company last quarter reporting. I was just sharing with everyone. Wow, actually their AI development quite interesting because their AI side of business have been picking up, and instead of a single digit growth, the AI side of service have grown up double digit. And I just referencing this to Alibaba business as well. So the rest of the business might look at just single digit, but because of the AI service double digit, and maybe it's an interesting things to look at. And who knows, the big news come in. So suddenly there's this order or contract come in that increase their RPO, means their remaining performance obligation, means their future contract up by close to 4 times at 450 billion. And this is what happened when the news come in. This is news. OpenAI 300 billion contract, and the founder Larry Ellison, he's the CTO, and he just suddenly become the world richest. So let's look at what does this 300 billion sounds like. If you look at their total revenue right now is close to 60 billion. 60 billion, 300 billion come in. Suddenly, my size comparison right here is 5 times. So let's say if the 300 billion come in one shot, my 60 billion jump to 360 billion, right, is close to 5x revenue in 1 year time. And how the market react is, when the 300 billion come in, right, it just goes straight down to the market cap 300 billion directly. So without knowing the details, I thought that the 300 billion is straight away go to revenue. Let's look at their earnings. Actually, their earnings per share went down. Their total revenue, everything just in the teens, like 12%, 11%, 70%. Okay, not really impressive. It's low double digit in terms of total revenue, but cloud is the high double digit kind of thing. All right. So the cloud infrastructure go by 55%. Cloud ERP, NetSuite ERP, global 17, 16% accordingly. If you look at just total revenue, it's just 12%. Yeah, it's not impressive in that sense. But what impressive is really their cloud infrastructure business. So let's look deeper into this 300 billion. So this 300 billion is not one shot. Yeah, 1 year itself, they just recognize revenue. So there has scheduling in that sense. So they schedule this 300 billion with 32 billion first, 73 billion like the next following year, another year 114 billion, another year 144 billion. So it's like 2026 to 2029. So in actual fact, the annualized year, right, is 2030. Is for the next 4 years. So the next 4 years, they break up this 300 billion into 32, 73, 114, 144. Yeah. So right now is future projection. It's remaining performance obligations that would potentially turn into revenue in 2027, 28, 29, 30. Just potential. And it may or may not materialize in a sense that, yes, they signed the contract, but you can cancel contract one month, right? Yeah, so this is what would potentially happen. But what if maybe the revenue come in, but would the client pay? So the question is, would the client pay? So in the call itself, they are very positive. They say, I have this booking, it grew by 77%, and then these are the RPO. And not just that, we have partnership with different like AWS, Azure, GCP. Right now, we have 34 multi-cloud data center. We are looking to increase 37, so double my data center. Yeah, so very optimistic planning. So what they foresee right here is there's 2 types of GPU data center. One type is for training, one type is for inferencing. Training is if I have a model, I need to keep on training to refine the model. There's these AI companies, if they want to train model, they will go for GPU training server. And after the training means the model have stabilized, people can utilize this model. Most of the time, they will use GPU inferencing data center for the service itself. And for them, they provide 2 types of data center. So for their AI companies, are focusing on training, they will provide this like GPU data training server for them to train, and after which they can switch over to GPU inferencing. So this is what they are claiming lah. Even if right now you have your own data, you want to move to cloud, right? Oracle Cloud. What they are saying right here is this, all right? So they have this service, they call it Butterfly, in the sense that there's this tree rack that come to this product called Butterfly. It costs 6 million, and this 6 million can do all the features that Oracle Cloud could provide. And they claim that if you compare to other providers, it would charge 100 times more. Means what they are providing is better and 100 times cheaper. This is what they say. So they claim a lot of things. They claim they can do two different type of GPU server. Now they are claiming if you want to move to Oracle Cloud, right? We are better and cheaper. There's a lot of claim inside the earnings call. So much that I was thinking, what happened to this management? Why they are boasting a lot of things, right? And here comes to things whereby the analysts, they raise this question. There is like enterprise application out there, right? So all those like office software, they say there's some pessimistic view recently. Means we are not so optimistic in future growth in the market. And then we are taking very cautious view in terms of the Trump tariff or whatever. So there's investor ask this question. Do you think this question is valid? Some of the enterprise software out there, right? Hey, they are very worried. They are very conservative. They are not as positive. They are taking cautious view. So what Larry Ellison replies is this. So for them, they have all those infrastructure. And all this infrastructure contains all the client data. And all this client data, if they're not using anything, right? Actually, this client data doesn't make much. But because all these client data are sitting in this very secure, they are very safe in their database, right? If they like to use all this LLM model, they have to be very careful. Because if they feed all this data to all this public LLM model, all this data might leak and then become some data learning material to all these LLM model, for example, ChatGPT, for example, Grok. All right. So this is what some of the companies worry. They don't want to share their internal data to all these LLM model. So what Oracle can do is all your data still stay inside this data server. But you can make use of all this model to generate your result, generate your content, find out what's the most important sales figure, sales product. All of this can take all this data to analyze, but not leaking out the data. So this is what they claim.
Oh, really?
And previously, they don't have all this application layer. In other words, so Oracle database, they need to rely on other office software. So for example, they point out a few right here, Workday, ServiceNow, or CRM, ERP. So right now, because they have all these AI tools that help them to create software, right now, client can keep their data safely and don't need to go through another third-party software to access all this LLM model. They claim right now, their client can just stay in Oracle data server, plug in the LLM model, and don't need to go through third-party software. So they could potentially eat into other people's pie. So this is what I'm reading right here. By the way, we are much bigger than Workday or ServiceNow, and we are serving a larger portion of the problem. We are able to do all of ERP, and we can add all of CRM, all the pieces engineered to fit together that makes it so much easier for the customer to consume. What is more important is this. So when they have OpenAI to come together to serve 300 billion, they cannot just straight away deploy. Why? They don't have like capacity. They need to invest in infrastructure. They need to invest in CapEx. So if you have all this contract coming in, you need to deploy CapEx. How do you deploy this CapEx and how does it up to your operation? So what they said is, actually they are quite asset-like in a sense. So what happened is, yes, they need to invest CapEx. But the good side is this, once the infra is ready and ready to deploy, their client can straight away jump in immediately. That compare previously need a couple of months, right now is just a week. In other words, when they deploy CapEx, in a few weeks, the clients come in, then they can recognize revenue straight away already. They can get money straight away. They are looking at 35 billion CapEx. Remember, their annual revenue is 60 billion. They are deploying 35 billion this fiscal year. And after they deploy, they can immediately have their clients to use it within a week and then collect money. So this is what they say. This is what I gather from the earnings call. Is wow. I don't know, is this a sales call or it is investor update? And the problem is, what's the risk? There's these articles that this analyst write up lah. He said Oracle and OpenAI are full of crap. When I read this one, this title is very bold, but let's look into the reasoning. And then from the reasoning, we see whether it makes sense or not. First thing, they have 317 million additional RPO, means additional contract, and 300 billion. 300 billion is from OpenAI. So do you see this as a single client risk? But before that, if you add up the 4 years, the RPO that they break out, there's a risk whereby, first thing, they might cancel order. Right. Second thing, even if they don't cancel the CapEx deploy, right, maybe they don't continue the contract. In other words, they cannot collect back money. All right, so this is a deeper problem. Means I deploy CapEx, right? OpenAI cannot pay. Means OpenAI went bust. And yeah, the Oracle has more incoming revenue than Amazon, Google, and Microsoft, and entirely made from one goddamn customer. So this is the risk that I don't know, is it investor ignore or it's just right now people just forget the risk right here. They just look at 300 billion. The problem comes to this. All right. So yes, you get a big order, big client, OpenAI. Can OpenAI pay the money? Means where the money come from, right? Where OpenAI make money from? If you look at the projection from OpenAI, the cash flow is going deeper and deeper and deeper into the pocket. So you can see 9 billion, 17 billion, 30 billion, 47 billion into 2028. So 2029 and 2030, maybe they start making more profit. That's why they project cash flow turn positive in 2030. But before that, do you see that the cash burn is deeper and deeper? In other words, they need people to fund this CapEx so that the money can go into OpenAI and OpenAI can pay our friend Oracle. So right now, if you look at their revenue size is 6 billion this year. I don't know whether they can charge higher. For individual user, it's $20 per month. And then definitely this $20 cannot make back one. So they need to make back at other different place. So regardless, is it based on usage or is it based on enterprise? So this is the single client risk, and then whether OpenAI can pay up. What I feel right here is they can manage the risk at the end, and if anything happens, they can pull back. But $100 billion investment later down the road, the risk will be higher and higher for Oracle when they deploy their CapEx. Yeah. So maybe first year, okay. Second year, risk higher. The 2030, the 100 billion one, if they deploy more CapEx, right, that one, the risk definitely much higher. If you haven't followed me on YouTube, just search GWL channel, subscribe, follow, hit like. Thanks again for all your support. I hope all these sessions give you clarity, give you enough turbulent management, so for us to continue to keep healthy, keep happy in the market.